What's up everybody, welcome back to AZ Trading, and in this video we'll be doing a video reply to one of the comments on my latest video by Tobogo, and he asked if we could shine some light on our higher time frame concepts. So when it comes to higher time frame, we think about fundamental analysis and technical analysis. So there's two things to keep in mind. So with fundamental things, what I think of is seasonal tendencies, the commitment of trader reports, and interest rates. So we can start with interest rates because that one's quite simple. So there's a website up here for central banks and just a summary of their interest rates. So if you're looking at, we'll do UJ and GU as examples. So for UJ, we want to find the interest rate for United States and for the Japanese. So over here, the American interest rate is 1.75. And now we find the Japanese one is negative 0.1. So the difference between those is 1.85. So whichever interest rate is higher is the one that is stronger. So right over here, the interest rate between this pair is positive 1.85%. So that just indicates bullishness with this pair. So next fundamental is commitment of traders reports. So same thing, we go onto a different website, this one here. I'll put the link for the websites in the description. And then we find the US dollar. We go on to the most traded contract, which is the September contract. And we go on to the interactive chart. And in here you can place different indicators. So this is a commitment of traders report indicator. All it shows is, so if we zoom out a bit, the red line is the one we want to follow. So the red line is the one that outlines the commercial speculators. So those are the big guys. So what this means is when there's an all-time low, or the lowest it's been within a few years, or the highest it's been within a few years, when it's lower, it means the commercials are net short. So they're putting in more shorting positions. So if we just look in the past, when the red line was at its low in 2015 here, they placed most of their shorts in there and price tended to be bearish. In 2017, same thing, we had a dump in the COT, and conversely in the charts there was a dump straight afterwards. Next thing, in 2020, you get the point, right? So now it's 2022, so COTs are net short right now. So when I go onto my charts, I write USD is very net short. So then we go into the Japan commitment of trader reports. Same thing, we find the most traded contract, we go to the interactive chart, and we put on our commitment of traders report indicator, and we find where we stand at the moment. So where we are right now, the commercials are very net long. So we can see in the past when we were net long here, price tended to pump a bit. Same thing over here. So what we write into our charts is the yen is net long. So over here, I've written Japan very net long. So if the USD is net short and Japan is net long, this chart is very bearish, if that makes sense. Because this is the USD yen. So if USD goes down and yen goes up, it just means it's very, very short, very weak. And the final fundamental that I look at is the seasonal reports. So same thing, we look at one for USD and we look at one for the yen. So I've got them up here. So this is the yen. So this chart just plots the average of the past 40 years of price action for this currency. So if we just have a brief look, like a generalized look, from June there was a low, and to October there was a high. So during that quarter, or that part of the year, there was bullishness for the yen. So I'll write for the yen in the seasonals, it pumps from June to October. And then if we look at the US dollar index seasonals, there's also a seasonal pattern from July, there's a high, and at October there's a low. So between that same period, the US dollar index is bearish. So we write that here. So USD is bearish during that time, yen is bullish during that time. So overall it's also very bearish. So with fundamentals, we use these three things, and we do that for every single pair that you look at. whichever one that matters to you. And if you can find one that aligns all of them, then that's a very strong fundamental reason for that pair to either be bullish or to be bearish. So with this pair, seasonals indicate bearish, COT indicate bearish as well. However, interest rates are quite bullish. So in the next interest rate report, since the American one changed quite recently, however the Japanese one hasn't changed for 6 years, if Japan shows that it's getting stronger and America shows that it's getting weaker, then all three of these fundamental analysis will be in line and it'll be a very strong bearish sign for this pair. Okay, so that's pretty much it for fundamental higher time frame analysis. And then you have your technicals. So technicals are the same thing we look for in lower time frames. So we look at where liquidity rests, we look for where imbalances are. However, we just do it in a higher time frame. I thought of a good way to put it. So with technical analysis, we act on a more if-then basis. So if this happens, then we do that. So for example, once it takes this swing high, so if it takes this swing high and it breaks down, then we can start to look for some bearishness perhaps. But the benefit of having fundamental knowledge in the back of your mind is we can start to anticipate things. So seasonals showing bearish soon, COTs bearish, interest rates, if this was bearish, then would be very strongly bearish. But the point is, with technicals, it's hard to anticipate. You have to be more reactive. But with fundamentals, you can kind of get an idea of what is likely to happen before it happens. And we can have a quick look at the British pound USD. With this one, our seasonals are showing some bullishness. Our commitment of traders are showing bullishness as well, and we have a positive interest rate. So this pair, the British pound USD, is showing a very strong likelihood of being bullish in the higher time frame. So this was a very brief sort of coverage of the higher time frame concepts we can use. They also apply to indices like NAS, E-mini S&P. Same thing, just go on the website and you find the indice. You go into it, you find the most traded contract. In this case, it's the September contract. Go into interactive and you can compare the COT data in here as well. Okay, I hope you enjoyed this video. If you did, please leave a comment, like or subscribe. And as always, take care. Peace.